right. Good afternoon, everybody. My name is Nathan Clark with the Nathan Clark team, and today I got Eric Malik in the studio with us. And Eric, I wanted to bring you on today to kind of discuss some things about closing costs, right? A lot of times we're hitting closing costs, and they're a surprise to a lot of buyers. So they shouldn't be a surprise, but we see about 13 closing costs that most buyers should be aware of before they purchase a property. And the last thing you want to do is have unbudgeted financial things come up the day before closing or the day of closing. So whether you're looking to buy your first home or trading up to a larger one, there are many costs on top of the purchase price that you must figure into your calculations for affordability. So these extra fees, such as taxes and other additional costs, could surprise you with unwanted financial nightmares on the day of the closing. So if you're not informed or prepared for these, it'll be a headache. So to help prepare some of these costs for you, we sat down, drew them up, wanted to go over them one by one so you're prepared for those. So I brought Eric on with us today and figured we'd do a quick Facebook Live. Eric Malik, tell me a little bit about yourself now.
Eric Malik, I've been in the mortgage business for about 18 years now. Help people with purchases and refinances, people who are doing their first-time purchase, maybe selling a house, moving up, upgrading. Biggest thing is just educating the people throughout the process, as Nathan said, so that there are no surprises when we get to closing, because we want this to be a really good transaction. We want people to leave the closing table happy.
And, that's the number one thing. And I've had it happen before, that you show up to the closing and you're like, hey, what's this expense? Right? And it could be a nightmare. So we try to make sure these things are all taken care of before closing and educate our clients as much as possible to make sure that doesn't come up. So one of the biggest ones that we go over, the first one, when you're buying a property, you're going to come across the fee, the appraisal fee. So explain to me what an appraisal is and how that works and what the fee is. And who pays it?
Basically what an appraisal is it's the lender making sure that the property you're buying is worth what you agreed to pay for it, because the lender has an interest in the property. They're putting up some of their money also, so they want to make sure that the value is there. Average appraisal starts at about $470 for a single family, and they can go all the way up to about $700 for a multifamily FHA.
Mm-hmm. So people got to be aware of that cost up front.
Now, the other thing you see that comes up too is property taxes. I see this a lot of times in Rhode Island. The property taxes, I believe you got to stop paying that up front too, right?
So the day you take ownership, there's taxes starting to accrue. And so that has to be taken into account. There might be some taxes that are due at closing. It depends on how the town collects the closings, whether they're collecting them in arrears or they're collecting them forward. So it's definitely something that you need to know how each town operates within each state, because It could definitely vary.
So now you got appraisals that can be anywhere from $800 to $1,000. I think you quoted. Sometimes more if it's multifamily, more units. How about condos? Are condos cheaper?
So condos and single families are about the same. Mm-hmm. They're down in that $475 to like $500 range.
Mm-hmm. Okay. And then you got your taxes. So if you're paying $5,000 a year in taxes, just easy number. What is most towns or what most closings? How much do you have to put down at closing? 6 months, is it? Or?
So no, usually we're only looking at the first 90 days of the ownership, because after that, you're either going to pay the taxes yourself or we're going to have them built into escrow, which is something that we're going to talk about a little bit later on.
Okay, so you about $1,250 up front right there. And then the next thing that we cover a lot of times, really not as much with the lending side of things, is the home inspection. Right? Yeah. So home inspection is a big part of the closing. Purchasing a property, you want to make sure that the house is sound, you don't have termites, then you have radon, and you have well quality, septic, things like that. So that's always a fun time, is doing the home inspection. We get to see a lot about the house. It's very important. So when you're purchasing a new home or even a pre-owned home, you should always do a home inspection. Always recommend that. We see the typical cost for a home inspection somewhere between $400 for your minimum, to it can go over $1,000 depending on what add-ons you have. As we said, you can test for radon, that's a couple $100. You can test for lead paint, things like that. Those are always additional. Typical, it's $400 to $1,000 we see for home inspections there. And the next one too, you kind of handle this on the financing side, the property insurance.
Yep. So everybody who buys a property, if you're going to have a mortgage loan on it, you're going to be required to insure the property. In the event something happens to it, it can be rebuilt. Mm-hmm. So the way insurance works is you actually have to pay the first year's premium the day of closing, and then you can escrow going forward for the future years.
But that first year has to be paid in full. So a single family home, depending on price, it could be anywhere from $1,000 to $2,000. And you get
Into multifamily properties where you're going to have tenants, there's additional costs associated because now you're insuring property that other people are going to occupy. At that point, you really, a little bit above all of our realms, really want to sit down with your insurance agent and have the conversation and make sure that your house is covered properly. But that's a cost you got to take into account that's going to be due on or before the day of closing.
Is that allowable to have the seller pay these closing costs that we're going over?
If it's something that was negotiated in,
the seller can definitely pay all of these costs for you.
Yeah, so we're really good at negotiating that for our buyers to have the seller pay that for them.
Absolutely.
You know,
The other thing you got to look at is service charges. This is something that surprises a lot of people. But service charges, electric, they don't have a charge. They might have a new account fee, but most people have electric at some point that they're switching over, so there's no new account fee. But you still have Verizon or Cox, whoever you have your wireless service fees. You got to keep that in mind because those can add up really quick. I remember during COVID when it first hit, I was looking at the household budget. I was going, wow, we're spending like $3,000 a year on cable and internet. So yes,
and they do have a lot of fees.
And it's a lot of the items they're necessities at this point.
Yeah.
They're not optional. You need heat.
Yeah.
You need electric.
you need Wi-Fi.
and at this point, you probably need internet just for your kids can go to school.
Yeah. The other thing, legal fees. So this is important. This is another thing that the lender handles a lot to do with this, but it comes up on the closing disclosure. The buyer pays. You need legal fees. And a lot of people mistake this, that they think they don't need an attorney when they purchase a property. I would disagree.
Yeah.
It's one of the biggest purchases of your life. You want an attorney.
You definitely want to make sure that somebody's reviewed all the documents, not just the loan documents.
There's other documents associated with buying a house. There's a deed that conveys the ownership, and that goes and gets recorded to ensure that you own the property correctly.
Right.
And you want
To make sure that they did the proper search. So you want a good attorney to make sure this all happens and that the property is conveyed to you correctly and you don't have any things that pop up years down the road.
And plus, you get title insurance.
Yep.
And title insurance is huge. What does that cover?
So I can speak a little bit about it. The title insurance more covers, there's one policy that covers the lender, and then there's one policy that covers the owner's title insurance policy. So it's basically them ensuring the search that they performed.
to make sure that if something does pop up 5 years down the road, you're not liable to deal with it. The title insurance company
would deal with the issue. Right. So it protects you by not making it your problem anymore.
Right. It's well worth the money. What does that typically cost the average buyer?
So title insurance is based on what you borrow. For the lender side, there's a preset amount, and then the owner's title insurance policy is based on the total purchase price. So $250,000 house, you're probably looking in the $450 range for the lender side, and another $250 for the owner's side.
And then, as you can see, if you doubled that and you bought a $500,000 house, those numbers would pretty much double.
So let me ask, who usually pays the buyer pays their side, seller pays theirs?
Or does this buyer pay the whole $750,000?
You can set it up if, like Nathan said earlier, his team always negotiates in seller paid closing. So these items can all be taken care of by the seller once again.
Awesome. What about mortgage loan insurance? So explain that to me, because when I first got in the industry, and I don't think most people understand it, but that's something that should be explained.
Yeah, so mortgage insurance is required anytime you put down less than 20% on a conventional loan. And what that does is it allows the lender
to loan you a higher risk loan. And in the event you don't pay, they're not taking all of the burden because it's insured. And mortgage insurance companies
is going to participate in the burden that the lender is going to have in the event of foreclosure. And then you get into FHA, VA, and USDA. So FHA charges an upfront fee, which gets financed into your loan, and then they also charge a monthly fee. The VA only charges an upfront fee unless you're exempt. And then USDA charges a small upfront fee and a small monthly. But this allows them to finance USDA and VA 100%
of your purchase, and FHA up to 96.5% of your purchase. So very minimal influx from the buyer whereas the lender's taking on all
the risk of your home. So they have to insure it, and they pass that cost along to the buyer.
So the typical mortgage broker fee really depends on the amount you're taking? Or
Well, that's the mortgage
and
insurance
the
is
type of-
based on the amount that you're borrowing. Mortgage broker fee is different.
Okay.
So when we start talking about mortgage broker, mortgage lender, and are there any processing fees or underwriting fees or things like that, they usually vary
from institution to institution. They're usually pretty close, though. Yeah, you could look over 100 closing disclosures, and you're going to
find that the average is probably in the $1,400 to $1,500 range.
Well, let's talk about that for a minute. We kind of go off the subject of surprise closing costs that you don't want to be surprised about. But let's talk about, we're talking about the difference between a mortgage lender, a mortgage broker, and an institution, right? Why shouldn't everybody just like, and the most common thing I'll hear when I meet with a buyer, and I know the difference, and I should, but most people I think watching this too just say, hey, why don't I just walk down to the bank that I've been doing business with
for the last 30 years, they'll lend me money. And I hear that a lot.
So the biggest difference between walking into your local bank, they have hours
that they're open. They're open from 9 o'clock to 3 o'clock. And on Thursday, maybe they stay a little late because most people need to cash their paycheck. They're not open on the weekends usually. So that's the biggest thing that a mortgage lender steps in and can offer: service and availability. Our hours are not preset. We work when you need us and when the agent needs us and when the buyer needs us. So if you're out looking at a house on Saturday at 5 o'clock in the afternoon, you can pick up your phone.
You can call me.
Yeah.
I'm going to answer the phone. You need an updated pre-approval so you can get your offer in. I'm going to be able to generate that and get it back to you on Saturday so you can get the offer in.
Because on Monday, the house might already be gone. So the biggest thing that the mortgage lender like myself offers is service and availability. We're all pretty competitive in the same interest rates, same cost. So our biggest thing is service and availability.
Yeah, I agree. That's very important. And I think it's important, too, and I think as a consumer point of people watching this, is if I'm the listing agent and I have a house for sale and I'm representing the seller.
And I have, in this market, it's not uncommon to have 5, 6, 7 offers on your house. Let's say I have 10 offers in your house, and I look at all 10 offers.
7 we're not interested in based on the price, and there's 3 that we're interested in. 3 are equal on price, equal on closing terms, equal on all things, but there's 3 different lenders. Let's say one is the big national company, right? Like Bank of America, for example.
Yep.
The other offer being the same is from a national internet website, let's say like Rocket Mortgage, Quicket Loans. And the third one is with a local lender.
Like Semper Home Loans. Now, as a listing agent, when I look at these things, I'm going to call the bank on all 3 of these because we know a lot of times that
the pre-approval is not worth always the paper that it's printed on.
Yeah.
Right. So we call and we want to dig a little deeper. It's like, how well did the loan officer know this client? Did they look at their debt to income ratios, their credit scores? Have they verified their employment? All these things. Or did they just write a pre-approval based on a 5-minute phone call, or even worse, just an internet fill out form, like where the client says, yeah, I make $1 million a year. Right. So we want to dig into them. We're going to phone call those people. And real estate's one of those jobs
that's not 9 to 5. It's 5 to 9.
Yes.
So it's 5 a.m. to 9 p.m.
And sometimes later.
And sometimes later, right? So many times, 11 o'clock at night,
you're putting purchase and sales agreements together. You're calling people. You need to be able to get a hold of people. If I'm calling someone that's never seen the client before, well, first of all, Bank of America or any national bank, they usually close in the afternoon, and you can wait till tomorrow to get a hold of those people, right? So as a listing agent, that's out, right? It's not that that's out, but I'm going to meet with the seller, and the seller's going to make a decision, and we're just going to give them information. I couldn't get a hold of this guy. Quicken, Rocket, whatever it is. Well, those guys
are great, but the problem is they've never met this buyer. A lot of stuff's been done on the internet. How much do we know the buyer's been touched by, or really pre-vetted?
Okay, with the people. And the third one, all right, I was able to talk to, in this case, our local lender, Semper Home Loans. And Semper Home Loans, yeah, I met with them. You went through the verification process, but I was able to call you and you picked up the phone at 11 o'clock at night and told me about your buyer.
And it's important because when you're buying a house, there's so many people involved. You have sellers, buyers, seller's agent, buyer's agent, seller's attorney, buyer's lender.
So all of these people have to be in communication for the next 30 to 40 days.
Yeah.
And they need to be available.
And lost time at any point in the transaction could cause a closing date to be missed. And when people have movers set up, people have their house packed up and they're living out of a couple of boxes, an extra day or two is really detrimental to the entire process of making it a good transaction for the seller and for the buyer and for both agents and for everyone involved. So you can't afford to lose any time.
No matter how stupid the issue is, everything needs to happen when it's supposed to happen. And like Nathan said, just as simple as being able to call at
7 o'clock at night and the phone being picked up to make an adjustment. If you can't do that up front, how much faith do you have you're going to be able to do it throughout the process?
Well, and I think that's what's very important to go over with clients when we're meeting with them. We're not meeting with them. These are our clients. We're talking to the seller, and I'm just pulling up comments here to be able to answer them while we're online here. But of being able to discuss that with it is how important. Like a lot of times buyers are just like, well, what's the cheapest rate? Right? Well, I can get 2.9%. Oh, I can get 2.889%.
Like that's like 50 cents a year. But they're shopping around and they're going on these internet ones that they don't have any service, but they can offer cheap rates.
What they don't understand is when that offers get presented, the listing agent's job is what's best for the seller, and the seller wants to get to the closing table, right?
Yeah, I mean, I always say, like you were saying, they may go on the internet and find this thing where they can, oh, look at this, I'm going to save $250 a year. But what happens if their offers keep not getting accepted and they end up having to go $10,000, $20,000 over asking just to get their offer accepted? Every dollar they saved, it actually now costs them more.
Well, exactly. Or they didn't get the house.
Yeah.
That's the biggest thing.
Even worse, they never get out.
The buyer wants the house, the seller wants to sell the house. Very simple, right?
We want to get to the closing table. The seller wants to get to the closing table. The buyer wants to get to the closing table. If we feel, hey, if I can't get a hold of the lender now, how's it going to be throughout the whole transaction when things come up, as many things do? I always say 1/3 of the work is getting the buyer, finding a buyer for your home. The other 2/3 of the work is getting to the closing table. So we want to make sure that the offer is only as good as it can be, is that we can get to the closing.
Yeah.
We going to get to the closing table?
You want to start it off on a good foot forward.
Exactly. Well, and also,
I tell a lot of the buyers that we meet with, the thousands of buyers I meet with every single year, okay, the thousands of buyers that I've helped purchase a property, I tell them all the same thing.
Most people look at 20, 30, 100 houses online. They physically go into 5 or 6, 7 houses before they purchase one, right? You wouldn't walk into the first house or look at the first house and buy it, right? Why would you do that with your lender? Doesn't it make sense? Just like you're shopping around for the right house, you're purchasing 2 things when you purchase a house. You're purchasing the house and the mortgage, right?
Yeah, absolutely.
Both are going to have for 30 years. Wouldn't it make sense that you want to shop those things around and make sure you're getting the
That's
best
right, but it's not just about the rate. It's also about the service you're going to get to be able to get to the closing table.
And to get your offer accepted.
How many times have you seen something like that happen? Like they're like, wow, this other lender
offered me a cheaper amount, and they can't close a loan.
Happens every day. And sometimes they don't even get the opportunity to find out if they can close a loan because they didn't get their offer accepted, like you said.
Yep.
Because if there's 3 people with the exact same dollar amount, 2 of them can't answer the phone, 1 does answer the phone, they win.
Mm-hmm. Exactly. No, that's very important. So I know we kind of covered that, but let's continue here because we had a couple other ones there. The moving cost. Okay, that's another fee that buyers come across. I typically see moving costs anywhere from
$50 to $100 an hour. That would be a van and a couple movers there. But it does increase 10, 20% during peak times. Peak times being right now.
Buying a property in the spring, summer, or just when there's a huge influx. It's supply and demand, so you see prices go up right there. The other thing is maintenance fees. So condos, they charge a monthly fee for maintenance, area maintenance out there. Some homeowners associations, okay, that you can be part of.
A lot of planned urban developments,
Yep.
and they just have a small fee for some common areas within the neighborhood.
Yep. Some banks, some lenders, they do require water qualification, right? So I think it's
The lending would require water qualification.
So if you're doing USDA or VA, you're going to have a water potability test that's required to make sure if you have public.
Private water.
Yeah.
If you're connected to city water, then we're going to trust that the city's giving you good water.
Yes, well, I hope so. But hey, you go to Michigan, Flint, Michigan, they have a different story there.
It's yes.
So I don't. What are they up to? Have you heard anything new on how they're helping those people?
That I do not know.
The other thing that we run across is you get your water checked, okay, but you also have local improvements too. Like sometimes I remember one of my first houses or second houses we bought, we had a sewer assessment on there. They were running sewer lines down the street,
and it was like a $20,000 sewer assessment. And I've seen this happen with closings. Like it should be disclosed, but all of a sudden we show up to the closing and there's a $10,000 assessment
from 10 years ago,
And
20
it's
years
just
ago.
transferring from buyer to buyer to buyer.
Yeah, all the seller goes, oops, I forgot to disclose that. Guess who just paid for that? So
It can be a touchy subject.
yeah,
at the
so
closing.
knowing if there's any upfront assessments, and the seller is to disclose that on their disclosure, and hopefully they don't forget, which sometimes it happens. Which leads me to last one, not to be surprised about, number 13, escrow for taxes and insurance. How does that work?
So, if somebody's putting down less than 20%, we're usually
You're
going
going
to
to want them to include their taxes and insurance in their monthly payment. A lot of people just like having it all included in one payment anyway. Just makes life a little easier.
you just make your one payment every month, then the bank. So what basically happens is you have your mortgage payment, which is your principal and interest. If you have mortgage insurance, that's in there too. Then you have your monthly tax amount and your monthly insurance amount. You just pay one big payment to the bank. And if your taxes are quarterly, every 3 months, the bank will then go into this escrow account. They've been setting that money aside, part of your payment each month, and they'll pay your taxes every quarter for you. And then once a year, next year when your
Homeowners comes due again, there'll be enough money in that little escrow account, that's what they call it, and they'll pay your homeowner's renewal. So you don't have to worry about it.
So it's just easier a lot of times for people to budget when they have one payment a month versus, okay, my mortgage is $1,000 and then every quarter my taxes are $1,800 and once a year my insurance is $1,200. You got to really plan versus I'm just going to pay $1,500 a month and let the bank handle all of that stuff, which is what most people do just because it's easier. So what that is at closing, we've got to build that escrow account. So let's say you're going to close on your
New house in November. You're not going to make your first payment until January when you close on that new house. So where's the month for
November and the month for December going to come from? We're going to put 2 months of taxes and 2 months of insurance into the escrow account to set it up and build it. That way, you make your first payment in January, but you've owned the house for 3 months. All of a sudden, there would be a shortage. So that's when we call it escrow building or tax insurance impound setup. We just put a couple months in ahead of time at the closing.
How do you pronounce it? Is it escrow or escrow?
I would go with escrow.
Escrow, all right. It's
Probably the most common mix-up, and I did it for years.
And I think
that's
it's
a
a
New England thing.
Maybe a
Rhode Island, Massachusetts. We probably will say it much differently than they do in Texas.
Arizona and stuff like that. All right, so those are the 13 extra costs to be aware of things that most people don't budget for when they're purchasing, especially their first house or even the 100th. They should know about this. I put these together on my website. If people want to go there and get them, it's nathanclarkteam.com. Just click under buyers. 13 costs to be aware of, so you can get yourself a copy of this if you'd like to see that more. But the bottom line, a lot of people might just be asking is, so I'm buying a $250,000 house, let's say.
What's my average closing costs that are going to come up?
You're probably between all the items we just discussed. You could be anywhere from
$7,000 to $10,000.
Right.
And it's going to vary. What are your taxes?
Right.
What type of insurance do you want? When we talked about the insurance costs earlier, we're kind of talking about just to insure the house. Does your wife have fancy jewelry? Are you going to add a rider on to cover that? Different things that are going to be in your house are going to dictate what kind of coverages you want. So to just come up with a number is a tough blanket statement. That's why you want to work with professionals and you want to have these conversations and you want them to have this
conversation with you and actually go over these items and make sure that you're prepared. And you want an agent that's going to negotiate in for the seller to take care of these costs,
or at least some of them.
Well, that's what we do. We're really good at getting these things rolled in. So if you're a buyer watching this, man, I don't have $10,000 so I guess I can't purchase the property. No, don't worry about that. We'll take care of this for you. We'll negotiate that for the seller to pay these closing costs for you, so you just keep the money in your pocket and roll that right into the purchase price. So if you have any questions about that, feel free to reach out to me or Eric. Eric, what's the best way somebody watching this that they can get a hold of you?
You can call me on my
Cell
cell
anytime. 401-413-0947.
And that's awesome. And I will attest to that, Eric. You're very good at picking up your phone. We love working with you.
Be able to get us our clients the best rates there. So it's been smooth. I've been working with you for now 4 or 5 years.
Yeah.
So I appreciate you coming on today, helping out and answer those questions. If you have any questions that we can help with that you think would be great for the show, please feel free to drop it in the line below. If you like this video, please like it, and don't forget to share it, and we'll get this out there and be able to help other people out. We appreciate your time. My name is Nathan Clark with Your Home Sold Guaranteed Realty. Have a great day.